if you really want to become a good trader, you really need to understand the proper mindset for becoming a good trader. Now, teaching and trading myself and on social media myself, I see, I read, I hear a lot of things from a lot of newer traders and a lot of, people in general. There's a lot of people who have strong bias towards a specific indicator or a specific way to trade or a specific strategy or maybe a book or a mentor or a community, this, that, and the other. When in all reality, none of that matters, okay? Each and every single different indicator is provided to you to be able to use to give and build yourself a playbook, a system to provide you with a little bit of an edge, assuming that you're going to execute the way it was drawn up to be executed, okay? Most indicators, most, things that you're going to put on your chart, obviously they're, delayed, they're lagging, moving averages are lagging, RSI is lagging, the VWAP is lagging. A lot of these things are lagging indicators. Now, does that mean that they don't provide opportunities to find different shifts and opportunities to enter trades? Of course not, right? But the trader who tends to have a lot of trouble finding consistency and becoming profitable is a trader with the wrong mindset, where they come into the market each and every single day after they've learned their strategy and after they've got the perfect indicator and after they, think that they found the best time frame to scalp, and they think that each and every single day is going to be the same. There's different market conditions, market cycles. There's different headlines and news, and the market is always evolving. The market is always changing. Okay. We have massive bull runs. We have, baby little bear pullbacks for a short period of time. All in all, the market is, proven to us for, 100 years that it's going to continue to go up, right? Will there be a day, doomsday, where the market shifts and it goes into a bear market for 1, 2, 3, 4, 5, 6, 7, 8, 10, 12 years? Maybe. But I'm not here to try to predict what's going to happen in 5 years or in 10 years, and either should you. What you need to become very, very good at, if you want to have the right mindset for trading, is understanding your risk management. That alone is what's going to keep you in business, regardless of the indicator, regardless of the strategy, regardless of the time frame that you trade, regardless of the best mentor that you are following that is teaching you how to trade. Regardless of all of that, your emotions, your risk management, your ability to money manage is going to be what keeps you in business this quarter, next year, and over the next 10 years. Okay. Let's take a look at this chart on my screen. This is today's price action in the NASDAQ 100. The majority of trading days are going to look like this. This is how we started off today. We had a little bit of a down move, down, up, down, back up, sideways, a little bit of a pop, lengthy period of consolidation. And typically what tends to happen is the market comes all the way back down into the range, comes to the bottom of the range. Maybe it gives another bounce, and then maybe it flushes. That's going to be the majority of your trading days. Okay. A trading day like today, where you kind of go a little bit down, you go a little bit up, you go a little bit down, you go a little bit up, you go sideways, and then you just have this monster mega rally. These days happen, but they don't happen often. They don't happen each and every single day. Now, again, market conditions and cycles change. It could definitely happen, 2-3 days. It could happen over the period of a couple of weeks. Hell, it can even happen over the period of a few months. But most of the time, traders think, let's say, for example, a trader came in today, they bought somewhere in the first hour or two, and they held long, okay? They had an amazing day off this just crazy bullish trend, and they think that tomorrow's going to be the same. So they come into tomorrow, and they do the same thing. But the market maybe goes up, down, sideways, back down, and then loses the bottom of the range, and they wonder what the hell just happened, right? Or you have a trader who maybe was trying to short here, thinking the market's going to pull back, trying to short here, trying to short here, trying to short here, and all they did was get stopped out, stopped out, and stopped out, and stopped out. Because in the past, I've personally seen price action that's broken out of the initial balance, kind of put in a high, consolidated, and then fell all the way back down to the bottom of the range. And you make money all the way back down, and then it holds, and then you're able to buy down here and play it back up. But if each and every single day, the price action and the structure and the moves were the same, then the majority of us can come on each and every single day, full port, go max size, because we've seen it happen before, because we've experienced it before, because maybe we didn't take it the last time and it worked and we should have been in the trade, and we think it's going to happen the next time. Guys, the market's going to do what the market's going to do. And I know you guys have heard that a lot. You guys have maybe, read a book or watched someone on YouTube, but the market's going to do what the market's going to do. The market is always correct. We have to position ourselves to be in the best place possible at the right times. Now, is every day an amazing trading day? No. Is there areas of opportunity to make money each and every single day? Absolutely. Even when the market is the most range-bound choppiness day, there's still traders out there. There's still hedge funds, institutions, big-time prop firm traders who are making money, taking 2 points here, 3 points there, scalping the range, going back and forth, and able to call it a day on excessive size and able to make money. Sure, right? Does it mean that it fits your profile? Does it mean that it fits your strategy? No, maybe it doesn't. You have to figure out what fits your profile and what fits your edge, and not try to chase everything else that's out there just because the market is open and it's moving. Does that make sense? So the main thing, if you want to be a more consistent trader and you want to have the right mindset, you need to forget everything you know about the market as far as what it did before. Right? So many people are fixated on, well, when the market did this, I remember this happened. And it's when you start to get into those personal biases and those personal, agendas, it tends to get you in a little bit of trouble. Now, again, we do have pattern recognition. We have different setups and things that we've identified in the past before that have worked, that have provided us a little bit of an edge, but we're never expecting it to always consistently work each and every single time. We have an open mindset. This trade's going to work or this trade's going to lose. I'm never thinking that 100% because I've seen this before and taken this before, and maybe I've won before, that it's going to work this time, right? So what's going to protect you and keep you in business and keep you in the game? It's proper risk management. Now, again, depending on if you're trading in a personal account, you're in a funded account, you're in an evaluation, that's going to be different, right? I treat evaluations a little bit differently than I do funded accounts and personal accounts. But again, once you figure out that sweet spot for you and you understand that each and every single day is not going to be the same, is when you're going to be able to start to see that breakthrough. When you come into the day not expecting, anything from the markets at all, but just trying to take whatever the markets are going to give you. Again, remember, as retail traders, we're not going to move the markets. Our orders sitting on the tape are not going to drastically change what's going on. Nobody out there is really going to care whether you win or lose money, whether you win $50 today or you win $50,000 today. Someone out there made $2, $3, $4, $5, $6, $7, $8, $9, $10 million. Your P&L is just a blip in the road, okay, in this whole cycle, in this whole environment that we're in, okay? So what do I want you guys to take away from this video? Have the right mindset when it comes to discipline, patience, and risk management. Those three things are going to keep you in this business a long time. Sometimes you're sitting at the market, you're sitting at the charts for 1, 2, 3 hours, and you've taken a couple of trades. Maybe some of those trades won, maybe some of those trades lost. And you know what? You're up $60 and you're kind of looking around and thinking to yourself, man, I could have went down to the local Arby's and worked an 8-hour shift and it made more money than what I made today. But as the market has proven time and time again, whether you make a little bit of money, lose a little bit of money today, tomorrow always provides a different and better opportunity. Tomorrow always provides a different and worse opportunity. So just because you maybe had a slow day today does not mean that you can't have the most record groundbreaking P&L day tomorrow. And just because you made enormous amounts of money today trading this amazing trend that we had does not mean that it's going to happen tomorrow. And in fact, you could actually lose everything tomorrow. if you don't master discipline, patience, and risk management. You have to be able to trade size that your account, for one, can withstand, and two, your own emotions can control. Because remember, once you get into a trade, it's all fueled on emotions. Okay, of course, we have technical indicators and technical levels to get us into trades, to take profit, to set stop losses. But let's be real. Let's call an ace and a spade, regardless if you've got $100 worth of risk on the table or you've got $10,000 worth of risk on the table. When that trade doesn't go in your favor as quickly as you're expecting it to, and you're in drawdown, you feel something. Okay, you are not going to sit here and tell me that you don't feel anything, right? And I know a lot of people out there are saying, yeah, you know, don't feel anything, become numb, whether you win or you lose. At the end of the day, we're human. You're going to feel something. Okay, you're going to be excited when you win. You're going to be upset when you lose. But when you lose, the risk management needs to be tied in and dialed in so tight to where you shake it off in a matter of 10, 15, 20 minutes, because you know you still have more capital to trade, and there's always going to be that next opportunity. See, that's the thing with the market. There's always another opportunity knocking at the door. And the only thing that's holding you back from opening the door and taking that opportunity is fear, is greed, is lack of confidence. Those things are where traders tend to self-destruct, go on tilt, overtrade, size too largely, try to get back, wins, or try to get back losses with one big win because, let's say they were up $1,000 this week and on two stupid trades that they know they shouldn't have taken, they gave it all back and now lost $1,000, and they don't want to end the week on the red. So they do something stupid and it puts them in a deeper hole. Patience, discipline, risk management is going to keep you in this business. That is what being a trader is. That is the proper trader's mindset. Because again, I don't care how long you've been in business, 20 years, 30 years, 40 years, 5 years, 5 months. We all win trades. Your brand new trader throws something on and wins. Your brand new trader also enters in a spot that they should have no business being in and loses a lot of money. And your most experienced traders start throwing on positions that maybe you wouldn't agree with and lose money. And maybe sometimes they make money. That's the beautiful thing about this business that we're in, is that it doesn't really matter how long or how little you've been in the market. Everyone has an equal opportunity to make money. The only thing that separates people who make money consistently and lose money is those who have patience, discipline, and risk management to be able to absorb the speed bumps and reap the rewards when the market gives them to you. Because remember, we have no idea when the market's going to trend 300 points. We have no idea when the market's going to be up and down and up and down and up and down. And maybe you're only able to make 5 points down and 5 points up and 5 points down, and then you lose 20 points and now you're break even. What are you going to do then? It's only then where you have to make that choice. Because at the end of the day, we all have the choice to trade, not to trade, to double our size, to decrease our size. It's not the market's fault. So many times I hear the market is so choppy, I just can't get anything going. Then walk away. Because remember, the market is going to do what the market's going to do in each and every single day. It's going to provide a different opportunity to make or lose money. So why would we fully invest into one particular trade, one particular day, allow our risk management to be completely screwed up, to lose everything when there's always the opportunity knocking at the door? I hope this resonated with someone out there. If it did, please like, comment, and subscribe. I'll see all of you guys on the inside of Evolution Traders. Those of you guys who want to join, that link is down in the description box below. Those of you guys who are looking to sign up with the prop firm, Apex, Top Step, I believe they're the best top two for the futures trading markets. Those links are also down in the description box below. You guys can click them, see, look around. Is it worth it for you? Does the price, kind of work out for you? Each company is going to offer different sets of rules, different, drawdowns, this, that, and the other. It's up to you to make that decision. Which one fits your trading personality? Personally, if you're a scalper, go with Apex, right? You're allowed multiple accounts. You can kind of spread out those scalps between multiple accounts. If you're a little bit of a zone trader, or maybe you like that, you need that P&L to fluctuate up and down, you might need to sit into drawdown. Maybe you need to dollar cost average, stuff like that. Go with Top Step. They're going to be a better fit for you. I'll see all of you guys on the inside.